Welcome back, everyone. Welcome back to Monday night, right? Obviously, today was a bank holiday, so loads of the sporadic volume and stuff. So, going to be talking about that, talking about my journey, talking about the charts. A lot to talk about, yeah? So, cool. We're just going to wait for another 2 minutes. Choco's here, Tom's here, Nimi's here, Kurt's here, the usual gang. Welcome, welcome. Did a small breakdown for Nimi, I think like not very long ago, right? Like a couple hours ago, when gold was still in this range. What did I say, right? You know, it's grabbed liquidity here, faked out. What is it going to do? It's going to push, right? So if you took a sell at 55, no bottom wicks, brother, right? That's exactly what I was saying. Yeah? Did you see that happen as well? So no bottom wicks, you're pushing, right? This currently has no top wick. That's why I said, right, your first level you could have taken a sell at was 63. Yeah? I think you got the gist of it during the actual breakdown. We just did it in the Discord. I think Bard was there. Not too many people. Yo, Jacob, welcome. Cool, so we got about 10 people. I'm just gonna get started. Phobix here as well. Yo, alright, cool. Alright, so this was the kind of breakdown I did for like in the middle of a day when somebody kind of requested it. But it played out exactly what I was, expecting, so not bad, the analysis, right? Alright, cool. Let's start from the monthly. Monthly is now creating a top wick, right? Monthly has now tapped into this level towards around these areas, I would say. And now it has officially filled this range down to here, right? It's filled the range. Now it needs to make a decision, right? Does it want to come down? Does it want to... Now, what the fuck? Does it want to come down, right? If it is, this could be a liquidity grab to come down. Does it want to start reversing? It could, right? What price usually does when it enters a range, it taps the top, bottom, like does this, right? So you could very easily, start ranging in this area. But we understand this is the monthly time frame. If we start ranging on the monthly, it's gonna be fucking huge candles, man. It's gonna be, what is it, like 1,700 pips? Yeah, so it's unlikely it's gonna do this very quickly, right? So it's gonna be slow, and we can look for those smaller ranges to be played on the lower time frame. So just understand that it's making a decision right now. This could be number one, this could be a liquidity grab. Or number two, this could be a start of a reversal. All right, cool. Let's look at the weekly. Weekly is, because the Monday there was a massive gap, right? Let's look at the 5. This gap here of 200 pips, right? This massive gap here. So the weekly has officially started to come up. It's creating that top wick for the previous weekly. So where is price likely to tap, right? We analyzed this in the middle of the day, but every time you closed towards around these sorts of areas, right? I'm looking at when was what are we mirroring? Last time price was coming down, bearish, tapped into here. What did it do next, right? So I'm looking at this. I'm looking at this. Also kind of looking at this, right? And then looking at this. These are the only areas I'm basically looking at, right? So what happened? Right, so in this case, right, price came down, broke through, right, so it didn't respect this level, but it faked out to come back up to grab liquidity, right, so it already filled the range below, and the range below is potentially down to these sorts of areas, right, at 1770, right here, right, so because this didn't happen, and we're just tapping here, this is less of a valid mirror, so we just ignore that. This is also slightly less of a valid mirror because you've already tapped this level, you've come up all the way to here to grab liquidity to push further down, right? You haven't really just come up and tapped this place the first time. So again, this is less useful, but I'm just understanding that I see this wick here, right? The first time you tap back in after coming down from these sorts of areas, right? These sorts of areas being, these highs here. We were once at these sorts of areas, right? So I would say this kind of like this zone here towards 1945. So this is still relatively valid, right? This one, what it do? Tapped, started creating top wicks around here. This tapped and started reversing, right? So we only have really 3 areas that we're interested in on the weekly, and I would say your area is about here. Why? Because after you create that top wick. After you wicked into this area, created a top wick here, right? Multiple times, right? Created a wick here, and here you created a wick here, and here you just didn't even wick. You just went straight up, no bottom wick as well, straight up, yeah? So, what happened here, right? You did also come down from here, but you were generally in a bullish structure. So this is also slightly less interesting to me. So I would say, this is what we're mainly looking at. These sorts of areas, these two mainly. So, that being said, I'm looking for my main positions towards 1872 on the weekly, right? Let's look at the daily. Daily, we were closing respecting, right? Respecting this area right here. Respecting here as well, right? So exactly the same thing here. It's going to come up and tap, right? Whether that's going to be tapping, initially around 1866 and then coming back down to around 1834 before coming back up, we don't know. But generally, the level that needs to get tapped before price does anything is here. All right, this is a key area that price makes decisions at. So that being said, right, this is a pretty good area, I would say, on the daily as well. I'm just going to move this slightly higher up, right, just to highlight the zone, right, the exact range that we're trading. I would say this is probably your top of the daily zone. So if it's on the daily, I'd be looking to take sells here, right? This makes sense, yeah? But obviously this is still quite far away and we're on the daily time frame, so how do we get up to there, right? We have to look at the lower time frame to see. And currently I don't really have any buys. Why? Because the daily is not going to come down and create that bottom wick, right? So on the daily, I can't see any buys unless you potentially wick down to these areas, right? Then I can get a buy. But once you come all the way back down, this could have just been a smaller liquidity grab similar to this, right? To start pushing further down. So I'm not interested in buys on the daily time frame. Drop down to the 4. Let's look at where the 4 is at, right, with these potential levels. Let's just mark up our levels first and then we can do the rest later. Yeah, this is not bad. I'm interested in these zones, right? So we're marking up our zones relative to this. This is okay as well. It's a little bit messy around here. It's not the greatest, I would say. I'd like to move it here actually, if not even further down, but then we have to look at what price is doing currently. It's okay. What does it look like now? It's a little bit far. Mark another one. See if we can get a closer range. Yeah, I'll probably just put it around here. It's not bad. Yeah, I'll take it. So 4 hour you have a couple ranges, right? You have your range up to 63, you have your range at 48, range at 1843. So what is price going to do, right? Price was ranging in this area, right? If you look at the 30 actually, it was ranging heavily in this area, broke all the lows, faked out, started pushing up, right? So if you were looking for sells at around 57, I think some people were, it would be very difficult because you've just grabbed that liquidity. You're understanding that this is a higher time frame liquidity grab. So if that's going to happen, you're going to start pushing, right? You're not just going to stop here. You grab this liquidity to break out of the range to tap the next range, right? To top of the next range, which is around these sorts of areas at 1863. So congrats if you got a sell at 1863. We broke this down, right? But if you didn't, it's fine. There's another trading day. Don't just be patient, right? So, all right, let's just finish analyzing the 4 hour. The 4 hour has no bottom wick. Does it need a bottom wick? Not necessarily, because this was a liquidity grab. So if you combine these two candles, it's just, then it has a bottom wick and it's just flying up, right? So this was a strong enough liquidity grab to start going up. I would ignore this massive gap here, mainly because you can't do anything with this information. It moved so quickly without grabbing any liquidity, right? So just trade what is happening now and this range that's being printed now. Let's go on the hourly. You can see that, look, this was a massive fake out, right? You faked out, closure above, just drive without a bottom wick, right? So potentially if you did hourly, breakouts and just kind of off the rip flip entries, they could have worked. But let's look at where we can potentially get our next positions, right? So I'm understanding that on the daily, every time we tapped into these areas, right, you have these wicks here as well. So what's to say, I want to zoom into this precisely, and let's see what was going on around there on the 30 at least. Oh, where is it? Did I go too far? No way, right? Ah, that's it. Okay, cool. Last time price tapped 1863. What did it do? Faked out, came back down to the range. Cool. Right, so if something like this happens, right, if we get something like this where you have pretty bullish closure above, but then you kind of faked out back into the range kind of, or if you say this is your top of the range, could be looking for, actually I would say this is probably the top of your range, yeah, because this is your top, this is my top of the range, right? So if you have a closure below, you faked out, right, I'd be looking for the price to tap these sorts of areas to get a sell, and this would be my potential sell levels, right? This is on the lower time frame. I'm currently on the 30, right? Understanding that on the daily, my daily sells are here, but to get there, we're gonna need to grab liquidity to go up. To like, it's price is gonna do this, right? If it's bullish, it's gonna do like this, right? To get up to this point, it's not just gonna come all the way up and then you're gonna get a perfect sell, right? That's not gonna happen. So what we're looking for is potentially price to tap into, I would say, if you're rejecting and then you kind of close below, I would say your range below is this. So let's look at what happened. Did it close below this range before it wicked up? Right, cool. You got a closure below, right? Right here. Do you see this, right? You get a closure below, you respect it, right? Next candle, no bottom wick, right? You're expecting this candle to flip, right? So you're looking for those entries around these sorts of areas, these sorts of areas. So you potentially could even get a first entry towards around 62. Right, and once that happens, you could potentially take pineapples at 64. But I'm going to mark this up as this. Just want to know what the ranges are. I want to know my ranges. This looks like a nice range. I feel like Owen Wilson. But yeah, cool. So these are my two, let's say, short-term sells. Understanding that if price closes below here, right, we had a fake out, right? Price starts closing below, respecting, next candle looks like it's going to start driving down, right? Grabbing liquidity here or here, get into a sell. If it doesn't come up and it's just this, we'll have one position. If it comes up to here, we'll have two positions, right? It's as simple as that. All right, but we're understanding that we need that closure below. Currently, right, this is a 30-minute. 30-minute is going to close respecting, right? Overall range here is closing within the range. So if that's happening, no trades, right? No trades. So within this range, I am not touching. Why? Because I'm understanding that I want higher time frame confirmations, and I'm going to look for that entry towards the lower time frames, towards that kind of wicks areas, and the top of ranges of the smaller time frames. So that's basically a breakdown. Very simple breakdown today, yeah. Yeah, I'm not looking for buys. Like, let's have a look for potential buy. Thought I moved my line there. Let's look for potential buys. Right? Say you tapped and you finished the sell. The sell has come down all the way. Oof, where can I get a buy? Potentially you can get a buy at these sorts of areas. I'm going to look at what this looks like later on, but I'm understanding this, right? So this is something that I'm backtesting, and it's called the trampoline, right? Why? Because you bounce, and I'm looking for that first bounce. The first bounce is always the most aggressive, so I'm looking for the trampoline towards around these areas. But let's look at what that looks like in terms of price. If price comes all the way back down to this area, cool, yeah, I'll get my buy. Because I'm understanding that it's going to tap at least towards around 56, so the range I'm trading is probably this to this for about 32 pips. Because if price does this, right, it comes down up to here, so let's say it comes down, breaks, grab liquidity, comes down here, it's going to tap at least towards these sorts of areas, wick up before you're able to come down. So these would be my buys after the sells, yeah. But also Let's look at what the buys in terms of confirmation. What do we need in terms of confirmations for these buys? I'm mainly just looking at this one area that I've been looking at, right? There's constantly this one area. Cool. We are closing overall, right? You know, bearish, trampoline wise, I think it's fine unless you really just wick all the way down, right? Your stop loss is probably all the way down at least here. What's this? This is only 60 pips. I feel naked with that. I don't know. We'll calculate the stop loss later based on the actual thing, but I would say potentially a position here, if not a position towards around here. But what would I need closures to look like, right? I would need closures to potentially be respecting here. As long as you're respecting this, potentially, on the 30-minute, right? Don't know what it looks like on the hourly. Let's have a look, actually. So hourly looks like, you know, it didn't respect, right? But okay, this hourly respected, and then this one wicked in, and then we just grabbed the liquidity towards it, right? So if the hourly is respecting here, I'll still be in my buys. If not, I'll look to manage risk. Does that make sense? So this is my level I needed to be respecting, and if it is, cool, I will be looking for my buys towards, you know, 47 and 52 sorts of areas. I'm not worried that I don't think this hourly is going to flip. If anything, you might get there's a chance that price could do this on the lower time frame, right? It could start breaking below on the lower time frame range here and then grab liquidity, but then on the higher time frame, what it looks like is you're still overall respecting. So that could happen, right? So that's what I've been seeing a lot, right? You're still respecting, but on low time frames you're already ranging here. In that case, it's difficult, but you would have to kind of play it by the structure. If you're seeing that price is creating lower lows, lower highs, right, like this, and then it's kind of ranging again, and then it breaks the lows, and then you're grabbing liquidity, cool. Even if this is all just one wick on the hourly, I could be potentially looking for positions here if it's continuously breaking the lows. Yeah, but if this is respecting overall range, like say it's like doing something like this, right, and then it fakes out, comes back in, right, and it even like does this, I will not be looking for that yet. I would need that closure below. Does that make sense? Cool. I think that's basically the analysis. It's relatively straightforward today. Buys are quite far away, obviously, because we're understanding that the weekly, right, it could continue to push up, right? So if the weekly is pushing up, you can potentially get your sells towards 75 sorts of areas. Getting a sell here is actually, I don't know what. This is 130. Oh, fantastic! Actually, I will be using this as stops potentially. Around 150 potentially. If you get in the second position, your second position would have nicer stops. Like, it wouldn't be there. It'd probably be around here. These highs here. But if you're looking for the first position sells, your stop loss doesn't need to be very high, because you're understanding that if it breaks above, right? If it starts breaking above here. What does this look like? Let's say the top of the next range. Is this your next range? Put it like here. I mean, in that case, you might as well put it here, right? Yeah, okay, so cool. Probably be somewhere around here. What does this range look like? Yeah, cool. If that is my, if this is my first, well, these are my positions, my stop loss would be towards these sorts of areas. I don't know, like 80 for the first position, second position around 60 something, but yeah. But if you get a sell here, right, you honestly, if it continues to rip up, it's difficult, because then it could start doing this. So I might even have a tighter stop loss for this, because if it does rip, it's gonna push and do this, yeah, and you might not even get a chance to exit. So I would have a slightly tighter stop loss on this, potentially like here, like 50. Maybe slightly more aggressive there, because you obviously can't use this as a stop, right? Well, that's like 400 pips. But yeah, cool. Does that make sense? I'm going to take some questions now, but actually let's talk about one thing. So obviously I am not a fully profitable trader yet. I've been trading for 5 months now, and actually most recently, like the past couple days, I realized something. All right, so I started my 100k and I wanted to test profitability in the 1st of September, but obviously because I'm also working and I have some other commitments, so I'm like not trading the full 20 days a month. I think in September I didn't really get many trading days in, and in October, like this week, I can't trade Monday, I can't trade tomorrow, I can't trade Thursday, so I can trade Wednesday and Friday. So I miss a lot of setups, right? Which means that over time, psychologically, once I see profits, I'll be more attached to them, right? I'm like, oh, does this mean I'm profitable, right? Does this mean blah, 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 blah. So once I see the profits, I'm like, oh, cool. And slowly my mindset changes to, like, subconsciously, it'll change towards, oh, I'm trading for more for money now. So I realized that today, and I needed to take a step back, right? So this is me taking a step back. I'm just gonna let the kind of knowledge do its thing, right? I understand price to some degree, even if it's not like 100% like Don, right? I understand price, and even I would say Don doesn't understand price 100%. We both probably understand it, closer to, like 80-90%, because we're always looking to evolve. But just kind of taking a step back, understanding that I'm trading because I'm looking to develop the skill and not chasing the profits. I was chasing profits initially towards the end of last week. That's why I was taking a lot of like 1 minute trades and everything. But like 1 minute trades are fine. But if the 1 minute trades and I'm looking for structure on the 1 minute, then that's not fine, right? So I just had that kind of point of realization, which is quite good. You go through phases as a trader, and psychologically, that's the kind of battles you have to play against yourself. So Toko, you've noticed that when there's war-related conflicts, gold reacts. So yeah, you can't prep for that, right? Like, how do you know when a war is going to break out? How do you know when like certain news is going to drive gold in a certain way? Like, there's just no way. You don't prep for anything. Like with all our price action stuff, we don't prep for anything. We prep for what price may do, right, when certain things happen, but that's after news, right? We react to everything. We're not trying to be first, right? We always come in second, right? We let the market do its thing, and then we come in and we take what we can. What prop firm do I use? I did have an MFF for 5k, but that was just like a testing account, and then I set up a actual 100k for the Alpha Capital Group. Yeah. So yeah, this one, exactly this one. Yeah, bougie. Night Santos. Yeah, honestly, like, I don't know if I letting the trade play out and everything. Like, I was seeing a lot of like potential like mini runners, like 50-60 pips last week when I made that 4%, but I lost the full 4% afterwards because I was like chasing the money instead. That's why I'm taking that step back. But I can understand now that, like, okay, I still made the 4%, right? It means that I can make the money if I stick to the plan, and I just need to continue to stick to the plan. Yeah, see you in, well, I won't be trading NY, so I'll see you guys in Wednesday NY, but have a good NY session. Can I explain celery and onion plays? Yes, I can. So when you're looking for the celery, this is a celery right here. You had a breakout, right? Let's say you had this breakout, right? Breakout into this range, respecting, fill the range. It's a celery. I don't trade anything else, Rico. I just trade gold. I am from Hong Kong. You think I was chasing profits in a hurry to hit profit target? Yeah, so, yeah, Bougie, I was 0.7% away from phase 1. So I was like, oh, I might as well, right? Like, and then I kind of stacked 2 lots, and I lost 4.5. But for the day, I've only lost 1 week's worth of profit. I'm still like up 2.6% for the overall. So like, because I'm managing like risk quite well. So like it's not affecting the actual trading and like the actual profits. It's just the mindset needs to change. But yeah, no worries, Nimi. Cheers, options. Hopefully we'll see you tomorrow. Where do I live? I live in London, mate. Experience over everything. That's why I believe as a trader your ideas. Yeah, Yeah, you have to trade your ideas. Like, this is why we do the analysis every day, right? These are my ideas, right? Once I have these ideas, I just execute them. That's all I do. Yeah, Bougie, it's the same. Like, at least, like, I feel like we have a lot of control over what we do, which is good. Yeah, no worries, Tony. Anybody have any questions, right? Like, psychology questions. We're all going through phases, right? Trying to become profitable. Yeah, it's just because I'm, like, obviously I have emotions, right? I'm a human. But at the same time, like, when it comes to trading, I can separate my emotions and, like, kind of look at everything very objectively. So I was looking at, like, okay, so why did I do that? Why did I trade that? I would have taken the same trade regardless, right? So I that trade that I lost 4%, I would have gotten in regardless. But understanding, if you take into combination that it was a Friday, it was like late New York session, and I was already up 4% for the week, why do I need to get into that trade, right? It's like, the only reason I was entering that trade was because, oh, I was close, right? Oh, I was like, what's gonna happen here? Do I take screenshots of my trade? I don't, but I journal every single trade. I currently have 121 entries on my, so like the most recent ones, right? I was taking these trades. This was my Monday. So I traded bank holiday, but I realized I shouldn't. So I lost only like 20 pips. Only 20 pips, so it's not like 0.3% or something. But the last two I was like overtrading. I highlighted this. I was like, nope, I'm overtrading right now. Don't overtrade. So I just highlighted. I closed the position at loss. Right? It played out. Doesn't matter. Right? Like, look at these. These were at least break-even trades. But I just closed them because I knew that this is, in terms of psychology point of view, this was more beneficial for me than continuing to trade. What do you say to yourself to keep yourself from falling into FOMO trading? Okay, so FOMO is something that happens to everyone, right? You see price move, like, for example, like this massive gap here. You're like, oh shit, what if I got into a buy, right? FOMO. But you just have to take a step back and you have to understand, like, would you have caught this anyways? Was there any indication of price wanting to drive up? Besides, you had this breakout here, but like, that was it, right? Were you expecting to take this? No. So if that's not your plan, and you weren't planning to take any buys or any sells there, then it's fine, right? Instead of thinking about FOMO, right, think about it like this. If you were actually in a sell here, right, because you were looking at, oh, potentially this was going to start retracing, grab liquidity before going up, so you're going to take the kind of liquidity move to come down before going up, right? If you got into a sell here, you'd be fucked, right? So instead of thinking about FOMO, just think about what would have happened if the trade went in the opposite direction, right? Sure, it went in buys, but what if it went up, right? But what if it went down? You have sells at 1862. Yeah, I mean, I called these, right? I called 1863. 62, it's gonna bounce around this range, man. Like, it's gonna bounce between 1863 and 1860. Eventually, right, you're gonna get a closure below potentially, and then like start coming down. But it's gonna come down to here, and then you're gonna start, like, your stops should be at least at break even, I would say, because you've already tapped into these areas. You've already tapped into this, and now you're respecting 60, right? So your next action is just to fill the range and do this, right? So you've already done the first part. You're likely going to come up to fill this range. So stop at least to break even. If not, I would exit potentially. Prop firm do I recommend? I do not have any recommendations for any prop firms because I've only tried one or two. I've been overtrading and trying to race my account. For instance, I'm in profits for the day, the target reach, but I still go on to trade. Yeah, so I mean, there's no issue with like over trading if you see your setups over and over again and they make sense. But you have to kind of take that with a pinch of salt when you're, for example, you're up like you were, right? You're up for the day, you're up for the week. So do you need to risk? Because every time you enter a trade, you're risking the profits you made, you're risking your account, right? So is there a need to do that? Yeah, not taking a trade is generally better than FOMOing in. Because every trade, right? Sure, we have a win rate of 70 something, 80%, right? Sometimes even 90%. But there is that risk, right? You're still risking 1 to 2% of your account. How do you find your stop loss for your trades? So for example, if I was in a sell here, right? Sell here, I'd be looking for higher, like the next range up, like what is it gonna do before it rejects, right? So I think we identified this as 1870 for our stops for this position. Why? Because I'm understanding that if price wants to come down, right, the next level is going to reject at is likely here. It's a strong rejection towards these sorts of areas, right? You have a level here. So if anything, I'll probably have my stops like above this zone, like these wicks here, like towards around here. And then what would that be in terms of my stops? It will be 100 something. Yeah, around 100 pips. Why? Because like if it gets to this point, you don't want to be like your stop loss extremely tight here, because it could wick up to this point, break it a little bit, and then start coming down, right? It just won't make sense. If price gets to this point, it will likely look for a rejection, or it will, it'll need liquidity to drive back up. So if anything, if it's the wrong idea, you can still get out around here, which is you've lost 30 pips less, right? Does that make sense? Yeah, relationship with money. If you live in a yeah. 4% at 2 different funded companies. I'm doing well. Any suggestion about psychology or almost freedom? So don't think about it like freedom, right? You're not. So 4%. I wouldn't even think about it as 4%. Like the money does not matter, right? This is the mindset I'm trying to get into. So the percentage of the account doesn't matter. Sure, you pass your phase one, phase two, but would you trade your account differently now that you're at 4% profit, or would you trade that differently compared to when you were at 0% profit? Right? If you trade it differently, then there's some emotion going on in between there. If you trade it exactly the same, then that's exactly what you should be doing, right? Because the trades are the exact same. The setups are the exact same. The only thing that's different is that you've made 4%, right? But for 4%, like the market's not going to know that, oh shit, you've made 4%. Cool. All right, let's throw him an easy one. Let's just throw him some money. It's not going to happen, right? Your stop loss always wicks out and then to TP. So you're potentially putting your stop loss a little bit too tight then. What resources did I use to learn all my technical and trading knowledge? DonVo and his live streams. I also learned it through the Miami kind of in person, but I would say mainly it was the Miami wasn't really for my learning. I was there to meet Don and meet Wix, mainly because I want to know who I'm learning from. Like I want to know who my teacher is. But I would say you have everything you need from the live streams. You have like 3 years, 4 years worth of live streams that you can just constantly look back on. There's so much stuff there. Do you find it hard to keep your mind off the charts? Yes. I love trading. I fucking love trading, which is why I traded on Monday. But now that I understand, Monday today trading was a difficult situation to be in, right? I shouldn't be trading. I'm going back to like basics, right? Understanding that, okay, I shouldn't be over trading. Monday is a day where this volume is kind of weird, right? You also had that massive push up for 200 pips out of nowhere. So just understanding that, cool, I don't need to trade today. And being okay with that. That's also a skill. There's a lot of skills that you need to develop in trading. Yeah, trading is very addicting because you're making money, right? That's why if you have the attachment to money, then trading is dangerous. If you don't get attached to money, you're only trading for the skill, then you're one step closer to being profitable. But having that kind of disconnect between, trading and money, because at the end of the day, we're all trading to make money, right? But you need to first develop the skills before you're able to make that money. So disassociate yourself from thinking about money for every time you enter a trade. Just think about what the market is giving you, and that kind of goes towards a lot of things, right? Potentially, if you're looking at 10 pips, right? Does the 10 pips closure here make sense, right? Is the market only giving me 10 pips today, right? If it's closing really, really against you and you've hit 10 pips, cool. 10 pips might be right. It might be 8 pips, might be 5 pips, might be 2 pips, right? But if the market looks like, oh, it's in your direction, right? You just grab liquidity, you could have come down, right? You survived the liquidity wick. Why would you just exit? Why would you just settle for 10 pips when you know the market's going to give you more based on your own technical analysis, right? So yeah, emotion plays in everywhere. Any other questions? If not, I will be looking to end the screen. Do I buy Don course or no? If yes, how it helps? Okay, so Don's course is good. It's very, very good because it breaks down his logic, right? And he is a profitable trader, obviously, right? So understanding how he thinks of the charts is the main thing I would try to get out of it, which is why I went to Miami, right? Because I want to know how he thinks and then kind of understand the way he looks at the charts. So the course is good if, like, there's a lot of basic stuff in the course as well about general trading. There's a lot of higher, like, difficulty concepts as well with, like, kind of all the plays that we had, but you need a general understanding of the market. So for the price that it is, it's so good. I think previously it was also $500, but buying the course will, number one, right, it'll set you in the right direction because you've put an investment into yourself, right, into the course, so you got to go through it. Secondly, the course has actually got really good material, right? So if you go through the entire course, you will be ahead of a lot of people already because you understand that, you know, you're actually sitting down, you're understanding the course material, whole market structure and everything. And then after that, go into the streams after you understand the course, right? You'll kind of put those concepts into play. Am I focused on price action only, or do you have any other strategies that you're testing? The thing is, like, all other strategies are just versions of price action, right? It's just people looking at price, they see a floor and then they're trading that. There's no, like, the strategy, all strategies are price action, I would say, unless you're looking like, you know, you're seeing like trend lines and whatever, but even that to some degree is price action. So I wouldn't say like I just trade price action. In terms of like my pure strategy, I would say it kind of boils down to three very simple things. It's either it's range, liquidity, and structure. That's it. If you understand those three concepts, you're like, well, you can do exactly what I just analyzed today. Cool. Well, thank you very much for coming. We had 36 people, I think, today. Jesus. But yeah, thanks for coming, guys. If you guys have any other questions, we'll be happy to answer them tomorrow. Obviously, you guys can start trading again tomorrow. I think Hus put a pretty good post about this as well, like a story. Said, you know, if the weekend has just gone past, right, don't come to the charts expecting gold to owe you any money, right? You're not definitely gonna get a trade. You're not definitely gonna get a win, right? So just come in fresh, do your analysis, and if you see your setup, take it. If you don't get it. But yeah, cheers, guys, and I will see you guys tomorrow.